Hello people, so this is CA Rajavardhan, and in this particular video we're going to discuss in detail solutions to financial reporting question paper from November 2020 term. So without wasting much time, come let's get started. So I'll quickly share my screen now. As you guys can see. So this is the paper. So I'm not here to analyze the paper and tell you anything like whether it is easy, whether it is difficult, how much time should it take, where was this question from, was this a repeated question, was this from ICA material, not from ICA material. I'm only here to discuss the answers in detail with respect to this particular paper. So let's take one question at a time and then discuss the solution to each of the questions. So I'm going to do this in parts. Part 1 would be question number 1, part 2 will be question number 2, and I'm going to divide it that way. So we'll have 6 parts comprising of 6 questions what is there in our examination. So part 1 will be question number 1. So come on, let's get started. So this will be my workbook. So PGH answers to all the questions should be written in English or in Hindi. Yep. Question number 1 is compulsory and working note should form part of the answer. That's the usual thing. So question number 1A, the compulsory question, has two parts, 1A and 1B, 12 and 8. Let us see the first one. So the first question goes like 1A. On April 1st, 2020, Star Limited has advanced a housing loan of rupees 15 lakhs to one of its employee. So basically the company has given loan to its employee. Company has given loan to its employee, housing loan of how much? 15 lakh rupees. At what rate? At an interest rate of 6%, which is repayable in 5 equal annual installments. So 15 by 5, 3 lakhs is to be paid at the end of each year. So first year end May 3, second year end 3, third year end 3. At the end of 5 years, you would have repaid entire 15 lakhs along with interest is what you should pay. So what is the interest rate? 6%. Very lovely interest rate. If there is a company which is giving housing loan at 6%, I would pounce and then take it right away today. Let's continue reading the question. It goes like at the end, employee is not required to give any specific performance against this benefit. So this is not performance based or to say loan given to the employee. It's like if you do so much of turnover or if you do so much of marketing, only then I'll give you loan. So this is not related to the performance of the employee. This is just a benefit given to all the employees in the company. Perfect. Then the market rate for the similar housing loan of by bank is 10%. This is where the question becomes interesting. So according to the market, what exactly is the interest rate prevailing for housing loans? It is 10%. So when the company gives it to the employees at 6%, company is giving some benefit to employees. So this, my friends, is employee benefit. We'd have to remember in days 19, yeah, employee benefits. Not just there. We have to go further to Ind AS 32 and Ind AS 109 because this becomes a financial asset which is supposed to be recorded at fair value. So if you go down to record this asset at 15 lakh rupees, whatever you gave to the employee, if you record it at 15, you're wrong. Why? If you give this 15 lakh to anybody else, you would have received interest at 10%. But here in this case, you are receiving interest at 6%. So the value of this 15 lakhs is lesser than 15 lakhs. There would be some amount of employee benefit expense which has to be recognized as expense in the very first year. You get that? How do we compute it? Yeah, discounting factor, present value, everything. Basically, we have to record it at fair value. How to compute it? I'll show you. But let's first finish reading the question. Yeah. Let us understand what do they want to us want from us in the question. The accountant of the company has recognized the staff loan in the balance sheet equivalent to the amount of housing loan disbursed. That is 15 lakh. So this employee has not learned Ind AS. Yeah, I've been doing this series of videos called as Ind AS with Accountsman, which is free and available on YouTube. I've put the link in the description. You guys can watch it. So maybe he's not aware of anything like Ind AS. So what has this guy done? So this accountant in this particular Star Limited has recognized the financial asset or basically the loan given at 15 lakh rupees, which is a terrible mistake. Why? You would have to recognize the employee benefit expense, and this guy has royally ignored the concept of fair value method here. So we would have to teach him fair value method. Let's see further. So the interest income for the year is to be recognized at a contracted rate. Okay. We would have to actually recognize the interest at 10%. So first we would have to discount it and then compound it and then start computing the interest at 10%. I'll show it. So is recognized at 90,000. So that's again a mistake. So is not recognized the financial asset regular correctly and is not even recognized the interest income correctly. Interest income is wrong. Financial asset recognition is also wrong. Okay, what are they expecting us to do? Analyze whether the above accounting treatment made by the accountant is in compliance with relevant Ind AS. Answer is no. It is not correct. What are the relevant Ind AS here? Relevant Ind AS. Relevant Ind AS is Ind AS 32 and 109 with respect to financial instruments, and we also have Ind AS 19, that is employee benefits. So Ind AS 19, Ind AS 32, Ind AS 109. 32 and 109 relating to financial instruments and 19 relating to employee benefits. All of the three is what you should know, but this guy seems to have no clue. Okay, if not, whatever if is done is wrong, then what do we do? Advise the correct treatment of housing loan, interest, and other expense. Other expense here is what? Employee benefit expense. In the financial statements of Star Limited for the year 2020 and 2021, along with the workings and applicable Ind AS. Okay, you would have to basically, you are required to explain how the housing loan should be reflected in the Ind AS complaint balance sheet. So we would have to end up preparing balance sheet extract also. The only thing that they've not asked here is statement of profit or loss extract. So we would have to compute what exactly should be the accounting treatment in consequent, say, combined reading of Ind AS 19, 32, and 109. How much of financial asset is to be recognized? How much of it is non-current? How much of it is current? How much of this expense is employee benefit expense to be recognized? How much is the interest to be recognized in each year of this loan 5 years? So that's what we are supposed to do. So come on, let us get started and do the answer now. Yes. Question number 1A. We're seeing solution to question number 1A. Yeah, we're doing in the books of Star Limited. We're doing it for the books of Star Limited. This would become the beginning of our standard. So applicable Ind AS. Applicable Ind AS. What are the applicable Ind AS? 19, 32, 109. So as per this applicable Indian accounting standards, how am I supposed to recognize this housing loan? Housing loan is to be recorded at fair value. So I would not write a detailed description, but I'll write in short: housing advance to employees is financial asset to be measured at fair value. Next thing, interest on financial asset is to be recognized at what rate? Recognized at, here they've recorded at 6%. They've given very clearly. So profit or loss, how much have they taken? 90,000. That is 6% of 50,000. But what is it that they should take? They should take a 10%. That is the market rate. Yeah. Interest on financial asset is to be recognized at market rate. Both of these things is supposed to do and recognize employee benefit expense. Statement of profit or loss. These three things they're supposed to do. Did the accountant do either of it? Accountant didn't do all these three. Accountant didn't do all these three. So what are we supposed to do? We're supposed to do all these three. You can write a little more described version of this in the examination as a part of suggested answers, but I've given you the brief working of this so that you people will understand this. Okay, come on. So let me now start the answer. So here, no problem. Yeah, year 1, year 2, year 3, year 4, year 5. So when I say year 1, it is 2021. Okay, I'll make it 2020, 21, 2021, 22, 2022, 23, 23, 2023, 24, 2024, 25. So these are the 5 years for which we are accounting. Perfect. And these years may, how much exactly is the opening balance of the loan? Loan is 15 lakh given. How much loan did you give? You gave the advance of 15 lakh rupees to the employees. Yeah, 15 lakh rupees give. Interest. How much is the interest on this? Interest is computed at 6%. You gave them interest at 6%, isn't it? At an interest rate of 6%. How much does interest at 6% come? 15 lakh multiplied by 6%. 90,000 rupees. You get that? Principal. Principal repayment. How much is the principal repayment made by the employee? Employee, they've given in the question that it's made in 5 equal annual installments. What have they told? They've told very clearly that 5 equal annual installments. So 15 lakh divided by 5 gives me 3 lakhs. So each installment repayment is 3 lakhs. How much is the installment repayment? Each, it is 3 lakh rupees. Let me just make this look like amount. Perfect. Yeah, 3 lakh. So, okay, principal repayment. Okay, fine. Total receipt. How much is the total money received? Total receipt by the company, because here you given the loan to employee. Okay, so you would receive the money back from the employee. How much did you receive? You received 90,000 plus 3 lakh. Am I right? Okay, if you want, I can insert another column here. Insert a column here, total due. Okay, due would become 15 lakh plus 90,000. Out of that, principal repayment made is 3 lakh. Total receipt is 3 lakh 90. Or if you guys are totally fine, I'll skip that column. I think that should be, people are at final level, guys. Let me stop phone feeding you. So what exactly will be the balance? So balance will be 15 lakh plus 90,000 minus 3 lakh. Will minus 3 lakh 90,000. That would basically give you how much? That would give you 12 lakhs. 12 lakhs would be the balance that's remaining. You get that? You can do 15 lakh plus 90,000 minus 3 lakh 90,000. Yeah, principal repayment every year. In fact, this column is not required. It's okay, fine. Okay, done. So how much will be the interest in the second year? It will be 12 lakh multiplied by 6%. That would be 72,000. And principal repayment would be same. 3 lakh you will repay. So totally how much will you repay? You will pay 3 lakh plus 72,000. So out of 12 lakh principal component, 3 lakh is paid. So how much will be remaining? You will be remaining with 9 lakh rupees. How much will be interest on 9 lakh? 9 lakh multiplied by 6%. That would give 54,000. And principal repayment will be 3 lakhs only. So what is the total repayment? 3 lakh plus 54,000. So out of 9 lakh, another 3 lakh of principal is paid. How much of principal would be remaining? 6 lakh would be remaining in 2023-24 beginning. So how much will be interest? 6 lakh multiplied by 6%. That gives 36,000. So if you do 3 lakh of repayment, then 3 lakh plus 36,000. 3 lakh 36,000 is what you pay. So finally, fifth year beginning, you would have 3 lakh rupees outstanding. On that interest will be 18,000. Wow, Excel is helping me auto compute the figures. So if you pay 3 lakh plus that interest of 18,000, how much would be the amount that you pay? 3 lakh plus 18,000. 3 lakh 18,000. So these are our total receipts. And this accountant of ours, what he has done is, he's recognized this 90, 72, 54, 36, 18 as income. And is recognized the asset at what rate? Asset at 15 lakhs. That's the mistake. Why? What did I tell you? Housing advance to employees is financial asset and it should be measured at fair value. So when we record at fair value, what should we do? The prevailing market rate is 10%. So now these are my future cash flows. I will discount these future cash flows at the market rate of 10% to find the present value of these items. Such present value, what I'll find at the market rate, that is discounting the future cash flows at the market rate. That becomes my fair value. Now, computation of fair value of financial asset. Computation of fair value of, what to say, housing advance given to employees. Given to employee. So this is what I'm trying to find. Okay, how do I find this? Same old thing. I would have to, in these years, what exactly is my receipts? These are my receipts. I will call these receipts as cash flows. Yeah, 3 lakh 90, 3 lakh 72, 3 lakh 54, and 3 lakh 36, as well as 3 lakh 80,000 is my inflows. So discounting factor. Discounting. At what rate? At the market rate. What is the market rate? 10%. Come on, let me now find discounting at 10%. Yeah, how much would you get it? Same old thing. 1 divided by 1.1. You know this. This shouldn't be difficult. 0.909. Yeah, what else do we get? I'll do it. 1 divided by 1.1. 0.909. It says the calculator. For next year, you get 0.826. 0.826. For the consecutive year, how much do we get? 0.751. 0.751. Yeah, I'm taking 3 digits. Then you get 0.683, 0.683, and then you get 0.621, 0.6221. So this is my discounting. Now, after I do discounting, now I have to find discounted cash flows. Come on, let us find discounted cash flows. Okay, discounted cash flows is 3,90,000 multiplied by 0.909. Same thing I would have to do for rest of the items. So by this, I have found my discounted cash flows. Now, these are my actual cash flows. Actually, what is the present value of the future cash flows? Now I'm going to find the total. So what is the total of this? Total is the fair value. 13,54,602. So what is this? Fair value. Fair value of that loan that I've given. You get that? So fair value of this loan is 13,54,602. But the loan given is 15 lakh. So technically, when I use this fair value, the concept what I'm trying to tell here is I have given 15 lakh rupees as loan to my employee, but I am receiving only 13 lakh 54,602 rupees back from him. So I'm giving 15 lakh, receiving 13 lakh 54,000 odd. So 1 lakh 46,000 or 400 or 45,400, 398 or whatever, which I'll not receive is my employee benefit expense. Is my employee benefit expense. I'll explain this to you with the help of a simple journal entry. Now, when I give this loan, bank balance is reducing. So I would have to write to bank account. How much is the money that I gave? I gave away 15 lakh rupees. How much did I give away? 15 lakh rupees. But going by Ind AS 32 and Ind AS 109, basically by Ind AS 109, I'm supposed to record this financial asset at my fair value. So what is the fair value of this? 13 lakh 54,602. So I'll write what is the, okay, housing advance or staff advance. I'll write it staff advance. Employee advance. They've told employee, isn't it? The name that, okay, employee. Employee advance account debit. How much is my employee advance? Okay. Employee advance is to be recognized at fair value. That is 13,54,602. So what exactly is this difference, sir? There's so much of difference between debit and credit. What do we do with that? Simple. So much of difference what is there is my employee benefit expense. Is it so? Yes. Employee benefit expense account debit. How much is an employee benefit expense account debit? 15 lakh minus 13 lakh 54,602. 1 lakh 45,398. I told you randomly then, but it turned out to be good. Thank you, God, for keeping my math good. So this, my friends, is my employee benefit expense, which has to be recognized in my statement of profit or loss. Okay. So, okay, fair value, value at which employee advance is to be NISCD recognized. This is the value at which employee advance is to be recognized. So, employee benefit expenses. Next one. What is the next one? Computation of employee benefit expenses. Computation of employee benefit expenses. Computation of employee benefit expense. What is it? Fair value. Fair value of employee advance. How much is it? Fair value 13,54,602. Okay. Actual employee advance. How much is it? 15 lakh. So here I go. I'll underline this and then right below employee benefit expense. How much is it? This would be 15 lakh minus 13 lakh 54,602. That is 1 lakh 45,398. What do we do with this? To be recognized. Expense in statement of profit or loss. Okay. So this is the point. Okay. We're not done. We're not done. Why is it that we're not done? We'd have to tell no how much should be the interest income to be recognized every year. What our accountant has done is he has recognized like a hero 90,000, 72,000. That is not correct. 90,000, 72,000 is correct if you recognize the asset at 15 lakh. Now, what we're trying to do, we're not recording the asset at 15 lakh. We're recording the employee advance asset at 13 lakh 54,602. Then what will be the interest? Interest in such case will not be 90. 90 it is when we take 6%. When you take 10%, it will be different. How much is it? That computation we have to do now. So again, this table will repeat. But with little changes. I'll tell you how is it changing. Oh, I forgot. Okay, computation of repayment schedule. What am I trying to do? Repayment schedule. I'm trying to insert a cell. Computation of interest income to be recognized in each year. Yeah, we're trying to compute the interest income to be recognized in each year. So our opening balance here, it will be fair value. How much of it? 13,54,602. And interest rate will no more be 6%. Interest rate in this case will be 10%. So here I would have to do 13,54,602 multiplied by 10%. You get that? and our repayments receipts will be same old this 3 lakh 90 3 lakh. Okay, fine, I'll put it here. 3 lakh 90, 3 lakh 72. So those, our repayments remain 3 lakh 90, 3 lakh 72. Those are the money that we're receiving. So what will be the balance? We'd have to find balance, closing balance. What will be the closing balance? We'll take opening balance. To that we add interest at 10% minus the receipt that we collected. So 11 lakh 62. That would be the balance. Okay. Next year ke liye, what will be the opening balance? Opening balance will be the closing balance of the last year. Done. So the interest will become how much? On 11 lakh 62, you should basically compute interest at 10%. Interest at 10%. Interest at 10%. So on 11 lakh 62, you compute interest at 10%. That comes to 1 lakh 10,006 rupees. 20 paisa is ignored. Then the receipt is 3 lakh 72. The balance will be 8 lakh 38,6068. So next year, ke liye, how much will be the balance remaining? For year 3, closing balance of the previous year becomes the opening balance of this year. Okay, something went wrong. Let me do it. 8 lakh 38,062. Here it will be 5 lakh 67,875. And finally here it will be 2 lakh 88. It should become 0. Oh, last year my interest actually 471. We should adjust so that it will become 0 in the last year. So what do? I would take this as is equal to 2 lakh 88. No. I would take 3 lakh 18 and subtract our 2 lakh 88,863. 471 rupees I'm adjusting. I want the closing balance to be 0. It should not be 470 rupees negative. Sir, why are we getting 470 negative? That is firstly because here discounting I took 0.90, 3 digits. So rounding off me, it got nullified there. So it's okay, don't worry. And here also it doesn't stop, it goes on. There are decimals. So 470 rupees you adjust it. So this is the closing balance. So we would have to recognize the asset at what value? Would have to recognize the asset at fair value. In the year 2020, 2021, 1st of April 2020, when you give 15 lakhs, you will recognize the loan at 13 lakh 54,602 only. The difference is employee benefit expenses. So on 13 lakh 54,602, interest income is 1 lakh 35,460. But you receive 3 lakh 90,000 rupees. Under closing balance is so much. Now, further in the question, they've asked us how exactly will it look in the balance sheet. Have a look. So they've asked, you are required to explain how the housing loan should be reflected in the Ind AS compliant balance sheet. Yeah. So disclosure in the balance sheet. Financial asset in balance sheet. How does it appear in the balance sheet? That's our next question. Okay. Financial asset should be recognized at what? Now, if we are doing balance sheet as on 31st of March 2021, so then it should be recognized at 11 lakh 62 rupees. That's what we basically tell as the answer. Am I right? So 11 lakh 62 rupees, perfect. Nothing wrong about it. It's correct. But not entire 11 lakhs. Lot of them end up doing mistake here. They come till here and they write 11 lakh 62 rupees as financial asset in the balance sheet. But try and understand, the entire 11 lakh 62 is a financial asset. I agree, but it's not completely a non-current asset. Nor can you tell it completely as current asset, because this 11 lakh 62 is basically money which you're going to receive over next 4 years. How much of it are you going to receive immediately? How much are you going to receive after 12 months? That has to be computed. Out of this 11 lakh 262, some money you will receive immediately. 8 lakh 38,068 rupees will be received after 1 year, because that is due in the year 2022 end also. So 8 lakh 38,068 is non-current asset and the difference is current asset. You get that? I'll show it to you. Concentrate. So what I'm trying to tell is, okay, I'll write it more neatly. Balance sheet extract. as on 31st of March 2021. Yes, so we're trying to do balance sheet extract. Yeah, statement of balance sheet or balance sheet. Chalega, jo bhi. Whatever name you call it as. So now on the asset side, A, or I'll write assets. Yeah, under the assets category, you would have two items. One, non-current assets. Two, current assets. Under non-current assets, you would have financial assets. Under these financial assets, you would have to write employee advance. You get that? How much of it will you write? You will basically write 8,38,068. It is a non-current asset. You would have to receive it, but not in the next 6 months. Next, same thing is going to happen with respect to our current assets also. But under current assets, how much will it be? You would write 11 lakh to 11 lakh 62 rupees minus 8 lakh 38,068. So 2 lakh 61,994 rupees of the employee advance is how much? What is it? It is basically our current assets. So this, my friends, is the balance sheet extract. So I hope this helps. So this is the solution to question number 1A. So I'll quickly summarize. Applicable Ind AS 1932-109, 19 employee benefits, 32-109 financial instruments. So what are the three things that they've done wrong? First one, housing advance is to be recognized at fair value. They've recognized at the cash price. Second thing, interest on that is to be recognized at market rate. They've recognized at that concessional rate. Third thing, employee benefit expense is to be recognized in PL. They've royally forgotten. So what did we do? We first identified the cash receipts over the next 5 years for this loan. Then we discounted it at the market rate. We arrived at the discounted cash flows. So the discounted cash flows total is our fair value. The asset has to be recognized at fair value. So the difference between the fair value and the money lent is employee benefit expense to be recognized in P&L. So when you recognize that at 13,54,602, here comes the second part. Interest has to be recognized at the market rate of 10%. So on 13,54,602, I compute interest at 10%, and our receipts remain the same: 3,90,000, 3,72,000, 3,54,000, 3,36,000, and 3,80,000. So the closing balance is found. This is the balance outstanding on 31st of March 2021. So this is the balance to be, okay, balance in balance sheet. This should be the balance in balance sheet. But this balance in balance sheet, whatever is there, cannot actually become the complete asset, because this financial asset has to be classified into two categories. What two categories? This has to be classified into the categories of current assets and non-current assets. So how much of it is current, how much of it is non-current? How much ever is receivable in the next year is current. How much of it will not be received in the next 12 months is non-current. Many of them, again, after they do it, they'll either forget it. If they remember, they'll say 3,72,000 is current. Boss, 3,72,000 is not current. Current is 2,61,994. How did we find this? You cannot jump by the receipt. You should go by the fact that out of this 11,262, there is some increase also happening here with respect to interest. So that is the reason you can't take 3,72. You get that? So 11,62 is what you're supposed to receive. 8,38 will be received after the next year end. So 8,38,000 will not be received in next 12 months. So much is non-current, and the balance will become current. So how did I arrive at this? It is 11 lakh 00262 minus 8 lakh 38,068. You get that? So this should be our answer for question number 1A. So I've quickly done the entire solution as well as summarized it to you at the end. So let us now go to question number 2B. sorry, 1B. I jumped it to next one. So 1B. Let me take a small sip of water. My mouth's dry. Come on. Let us now do 1B. Let's first read the question. What do they want? The following information is available relating to Space India Limited for the financial year 1920. Okay. A company which is into space research from India. Yeah. Next Tesla, maybe. Yep. So maybe they're trying to find life in Mars. So what are they given? Net profit attributable to equity shareholders 90,000. Number of equity shares 16,000. Fair value for each equity share is rupees 90. So looks like this is a question based on EPS. Okay. Potential ordinary shares. Yeah, they've given potential shares, options, convertible preference shares, applicable corporate dividend, that is on convertible preference shares. They've given 10% convertible debentures. Here is a very important trick. This is very much there on the face of it. Understand, whenever you're trying to do computation of diluted EPS, remember to take convertible debentures before convertible preferences. I repeat, whenever you're trying to compute diluted EPS, remember to take convertible debentures before convertible preferences. Though in the exam, though in the question paper, they've given convertible preference shares first and then they've given convertible debentures, should always take convertible debentures first and then convertible preferences. Because the answer is pretty simple. Why do we do this? Answer is pretty simple. If I end up taking preference shares before, even if the preference shares are anti-dilutive, it might not be evident to us. So the order is pretty simple. First take options, then take debentures, and at last take preference shares. The reason is, at times, if the preference shares are anti-dilutive, it might not be, I would say, we cannot make out that they are anti-dilutive if we take it before debentures. So don't do that mistake. Always take options first, then debentures, and then you take your preference shares. Yeah. Okay, fine. Those of you who don't have any clue about what exactly I'm talking, don't worry. I will do it and I'll show it to you. So only remember that debentures first, preference shares next. Okay, bye. Let's start. So let's read the last line. What do they want? You are required to compute basic and diluted EPS of the company. Oh, perfect. Very nice. Easy one. 8 marks is in your pocket. Very easy. This is a very easy one because not many adjustments, guys. So it's a very simple one. Corporate dividend tax is there, tax rate, tax shelter is there, and they've given options. Yeah, pretty easy. Come on, let's start doing this. So we're doing solution to question number 1B in the books of Space India Private Limited. Space India Private Limited. Usually don't like doing this analysis. They're telling this is easy, this is difficult, this is from there. I only prefer solving because easy, difficult is very subjective. Like, okay, now all of you watching, you're technically CA final students. So if I ask you CA Inter, is it difficult? You would say, easy, sir, it is. That's what you would say. But to a student, when they're studying CA Inter, oh God, CA Inter is so difficult. So once you know it or once you do it, it is easy. But till you do it, it is very difficult. So it's very subjective thing. So I don't really find a point in doing an analysis or watching an analysis because that's not a big deal that way. But solution is pretty interesting because that's where you get to learn something. Okay, fine. So movie is more nice than the review. What do you get by doing a review of a movie? Okay, fine. Are you going to decide whether to watch the movie or not? It might sound good with respect to a movie, but with respect to examination, you can't choose whether to write an exam or not, isn't it? Fine. No offense to you people. Come on, let's quickly do our answers. So profit attributable. Equity share holders. Then we have number of equity shares outstanding. Number of equity shares outstanding. Then that's it. EPS. earnings per share, whether it is diluted or not, that doesn't bother us. We're trying to just find it. Yeah. I hope you remember the fact that you would have to check whether it is dilutive or anti-dilutive, and you would have to take only dilutive ones. If it is anti-dilutive, meaning if it is increasing the EPS because of any potential equity shares becoming equity shares, such as to be ignored. The same is standing ever since our accounting standards also. The same is there in India also. Let's do this. Okay, fine. Come on, tell me how much exactly is our net profit attributable? 90,000 rupees. 90,000 rupees. How many equity shares are there? 16,000 equity shares are there. Okay, how much will be my basic EPS? 90,000 divided by 16,000. That gives me 5.625 is my basic EPS. What is this, guys? Basic EPS. Basic EPS. You guys get that? So basic EPS is 5.625. Let us go ahead now. So let's do one after the dilution. So what are the total potential equity shares or potential ordinary shares? Potential ordinary shares. What are the potential ordinary shares that is there in this particular case? I don't know what hour of the day are you watching. I am recording this video at 12:51 in the night. So 9 minutes left to 1 o'clock. Yeah, because I was little occupied with other work in the day. So here we are in this hour of the time. Options. Number one. Let us take it. Number one. Options. What's the problem with options? 900 options with exercise price of 75. See, if there are options and if they are given at the fair value, then no problem. But concentrate here. What is the average fair value of the share? 90 rupees. What is the average fair value? 90 rupees. But here the shares have been issued at 75. So shares which are of rupees 90 are being given as option at 75. So they're getting shares at a lesser price. So when they're getting shares at a lesser price, I will not see it as discount. What I'll see it is certain number of shares have been given free. How many shares have been given free? It's like this. So 90 rupees, sorry, 900 options have been given at 75 rupees. You get that? So basically, how much money did we collect? 900 into 75 and 900 into 90. So the difference is the money that I get. That money, if I divide by our 90 rupees, I basically understand how many shares have been given free. I'll tell you in a simpler way. 90 rupees is the fair value, 75 rupees is the excise. So how much is the discount? 15 rupees is the discount. 15 rupees is the discount price. You get that? So 15 rupees is the discount price per share or per option. How many options are there? 900 options. So 15 into 900. 15 into 900 gives us some amount. If we divide it by 90, you'll understand how many options have been given free. Okay. Options given free. So what am I trying to do? 900 options. Ouch. I'll write it differently. Options. How many options? 900. Fair value per share. How much? 90. Then excise price per option is how much? Yeah, excise price per option is 70 or 75? 75. 75. Yeah. So now tell me how much is the discount? Discount per option is 90 minus 75. You get that? So total discount money. Total discount amount is how much? That is 15 multiplied by 15 rupees per share, no? Into 900 options. So 13,500 rupees. You get that? So number of free shares given. How many shares were given free? That is 13,500 divided by 90. That gives me 150. So this is how you write it. If you don't understand this, you can easily write it in a different way. So this is how usually it will be given in the materials. In the materials, what they do is straight away give 900 multiplied by 90 minus 75. Close the bracket. And this whole thing will be divided by 90 per share. So this is how they do. And it comes down to 150 rupees. So this is my way of understanding the logic, and this is how it's given in the material. Usually that's how it's printed in the materials. So either of it you do. So what is happening? Profit attributable to equity shareholders, is it increasing? There is no increase, no decrease. But number of options, what is happening? It is increasing. How many options are we increasing by? 50. 150 shares are increasing without increasing the profits. So 150 shares have been increased. You get that? So now let's see the impact on what do you say, our profit. So profit will become how much? Okay, I would put a table so that you would start understanding what I just did. Where am I? Otherwise, how are you people? I hope you're doing good. Should be. So happy that November exam happened in the midst of entire pandemic. People had left hopes. Okay, fine. Now exam won't happen only, isn't it? Okay, fine. Now, in this case, how much will be the profits? Profit attributable to equity shareholders will be 90,000 only. Will be 90,000. No less, no plus, isn't it? 90,000 always. So how many options will be there? Options will become 16,000 plus 150 options. 16,150 options. So how much will become our EPS? This is our diluted EPS. Diluted EPS after converting. If this potential ordinary shares gets converted, if this potential options gets converted to shares, how much will it be, Bolki? So that will be 90,000 divided by 16,150 basically becomes 5.572. Concentrate. The EPS was 5.625, 5.62. Here it is 5.572. So it is dilutive. It is dilutive. It is dilutive. So will this be considered in computation of diluted EPS? Answer is yes. What if on this conversion, what if earnings per share had become 5.81? 5.81 is greater than 5.625. So these options, these potential ordinary shares are anti-dilutive in nature. So this has to be ignored in computation of diluted EPS. You get that? Okay, come on. Now let us go ahead and quickly solve the next one. I'm going to say consider the next, what is there? Yeah, option 2. What do we do? I told you, I've been mentioning this to you several times. We will not be doing convertible preference shares. We will first do debentures and then come back to convertible preference shares. Yeah, 10% convertible preference shares. 10% convertible preference shares. Yes, 10% convertible preference shares. How much is this money? This is 10 lakh rupees. Okay. 10 lakh value. Okay, I'll make it simple. I'll write debentures NV or I'll make it debentures in rupees. Debentures in rupees is 10 lakhs. What have they given further? Of rupees 100 each. Okay, per debenture, nominal value per debenture. I'm teaching this in such a way that even if there is a intermediate student, he should also be able to understand as to how exactly is this final paper solved. So 100. Okay, perfect. Then number of debentures will be how much? However, if you people are very good at this, you would watch it at 2x speed. Yeah, how many debentures are there? Number of debentures is 10,000. Then what have they told? 10 lakh rupees, and each debenture is converted into 4 equity shares. Okay, number of equity shares per debenture. One debenture will become 4 shares. One debenture will become 4 shares. How many debentures are there? 10,000 debentures. So number of equity shares on conversion. How many equity shares will you get on conversion? One debenture will become 4 equity shares. There are 10,000 debentures. Number of debentures is 10,000. So how much will you get? We will get 10,000 multiplied by 4, 40,000 debentures. Sorry, 40,000 equity shares. So how much is the potential equity shares increasing add on here? It will be 40,000. 40,000 new equity shares will come on conversion of this debentures to equity shares. Further, will there be change in the profit? Obviously, because whenever the debentures are there, for these debentures, you would be paying interest. Now, when they become shareholders, you would stop paying them interest. So that will be savings. So interest. Next. Interest savings. Interest savings on conversion. How much exactly is the interest savings on conversion? First, we would have to compute interest amount. Interest. How much is interest? Interest at what rate? Interest at 10%. Interest at 10%. So at 10%, interest will be 10 lakh rupees multiplied by 10%. So 1 lakh rupees is the amount that will be saved. You get that? So 1 lakh rupees or profit will increase. It is 1 lakh, but not only 1 lakh. Why? If there is 1 lakh rupees interest, don't you think 1 lakh rupees interest is our expense? Whenever there is expense, there is tax shelter. Your tax has to be paid. Expense will reduce our profit, meaning reduce our tax. Now, if this debentures are converted to equity shares, what will happen? Interest expense will not be there. If interest expense is not there, then what happens? Our profit will increase, then we would have to pay higher tax. So interest gives us tax shelter. So technically, interest is not 1 lakh. Interest is 1 lakh less the tax shelter that it provides. Okay, tax shelter. You've been doing this in your CA Inter FM and then CA Final SFM also, but let me again tell it to you. How much is the tax shelter here? Tax shelter is 25%. So tax shelter. You can say tax savings also. Tax shelter at 25%. So 25% is 1 lakh multiplied by 25%. Here it is less, okay guys. You have to deduct. It is not add. Less tax shelter. Now tell me what will be the amount that you will get. Yeah, it will be 1 lakh minus 25,000. 75,000 is the profit that will be increased. So how much will be the profit increasing? 90,000 was there. So to this 90,000, now we are going to further add on 75,000 rupees. 75,000 profit will increase and number of equity shares will increase by 40,000. So come on, let us do this part now. Yeah, how much will be our profit in this case? Profit will be this old 90,000 plus 75,000 additional profit. So 1,65,000 will become our profit. Number of shares will not be 16,150 anymore. It will be 16,150 plus 40,000 new equity shares. That's come up 56,150. You get that? Now check how much is our DPS. It becomes 2.93. Why? 1,65,000 divided by 56,150 becomes 2.93. Our earlier EPS or DPS, diluted EPS, is 5.57. Now it has come to 2.93. That is reducing. So it is dilutive in nature. So these potential preference shares, what I just mentioned, are dilutive in nature. What are they? Dilutive in nature. So whenever they are dilutive in nature, they'll be considered in computation of diluted EPS. If in case they were anti-dilutive in nature, what were we able to do? Then we wouldn't have considered it in computation of diluted EPS. Perfect. Come on, let us do the third one now. Third one is convertible preference shares. Convertible preference shares. Our last part. By this will be done with 20 marks with ease. Very easy one, isn't it so far? Looks easy when you see. That's what easy is, when you know it. So when you know something, it's easy. What you don't know is difficult. That's the human mind. It always calls it easy, difficult. Actually, you should replace this word easy and difficult with what I know and what I don't know. What I know is easy to me. What I don't know is difficult to me. So it is not easy, difficult. It is whether you know or you don't know. Yeah, come on. Difficult to digest that logic. Sorry, but you would have to bear me for this. Come on, let's go. Convertible preference shares. 7,500 shares are entitled to cumulative dividend of 9 per share. Each preference share is convertible into 2 equity shares. Okay, first number of preference shares. Number of preference shares. How many preference shares do you have? You have 7,500 preference shares. How many? 7,500. Okay. And then what have they told? Each preference share will get convertible into, each preference share is convertible to 2 equity shares. We had 1 preference share, it becomes 2 equity shares. Okay. Number of equity shares on conversion. Okay. Equity shares per preference share. How many? You get 2 equity shares per preference share. So number of equity shares on conversion. How much do you get? How much do you get? ఎత్తర కిటి ఎవడ వందిచ్చి ఎంత వచ్చింది? How much did you get? ಎಷ್ಟು ಬಂತು? 15,000. So basically the number of shares will increase by 15,000. Okay boss, that is done. Now tell me, would there be impact on the profit? Obviously. How? Because if they are preference shareholders, you would be paying them what? You would be paying them preference dividend. Now once they become equity shareholders, you need not pay them preference dividend, and profit attributable to equity shareholders will increase because the preference share dividend is ignored. Okay, come on, let us do that now. Savings in profit or preference dividend savings. How much is the preference dividend savings? Firstly, how much is the preference dividend? They have told preference dividend per share is rupees 9. I am not telling you. They have told this. Yeah, have a look. Preference dividend per share is 9 rupees per share. They have given it. Okay, how many shares are there? 7,500 shares. So preference dividend is how much? It will become 9 rupees multiplied by 7,500. What is there here? That is 67,500. But it doesn't stop there. If there was preference dividend given, then you would have to pay corporate dividend tax or dividend distribution tax. Because these preference shares are getting converted to equity shares, now you need not pay them preference dividend. If you need not pay them preference dividend, you need not pay corporate dividend tax or dividend distribution tax also. You get that? So that will be also addition in savings. CDT or DDT. DDT is not that powder that you put. Okay, guys, I'm not using that. 8% at 8%. Now there is little bit of ambiguity here. But you're wondering, sir, what ambiguity? When they told 8%, is this 8% the net DDT rate or is this the gross up rate? Like, should we take 8 divided by 92 or should we take 8 divided by 100? They have not told. So what do? We'd have to make an assumption. Sir, what do we assume? Grossed up or net? We'll assume this to be net and then do 8 by 100. Sir, can I do 8 by 92? Perfectly all right. You can do it. Either ways you do, give a note at the end of it saying, in the absence of specific mention in the question regarding the corporate dividend tax being grossed up or net, we have assumed that such 8% is the net corporate dividend tax rate. You get that? And the answer is complete. If it is assumed to be the grossed up rate, then the answer would change accordingly. This statement you would have to write at the end of the question. Even if it is otherwise, please make the statement. Sir, will you write it? Yes, I will. When? After I complete. For now, I will go ahead. I'll assume this to be the net rate. So how much will that 8% be? 8% is simple. 67,500 multiplied by 8%. 5,400. So how much is my total savings? 67,500 plus 5,400. 72,900 is my total savings because of converting my preference shares into equity shares. I need not pay this extent may preference dividend. So this will be my increase in my profits. How much? How much? How much? 72,900. Okay, come on. Let us do this now. We'd have to compute the EPS, shall we? If these get converted, what happens? Previously we had 1,65,000 profit. Now to that we are going to add up 72,900 profit. So profit will become 2,37,900. Further 56,150 outstanding shares were there on conversion of those options, conversion of those debentures to equity shares. Now if these convertible preference shares get converted to equity shares, we'll have how much? 15,000 fresh more shares. So that is 56,150 plus 15,000, 71,150. Then how much will be your DPE, diluted EPS? 2,37,900 divided by 71,150. That will give me 3.343640197. Observe, it was 2.938 here. It became 3.43. So it is anti-dilutive. Anti-dilutive. So the moment this is anti-dilutive, would we be considering this in computation of diluted EPS? The answer is no. The answer is no. Because it is anti-dilutive in nature, we would not be considering convertible preference shares as what? We would not be considering convertible preference shares in diluted EPS computation. Yeah. Two important points. Number one, I'll write here, note. Two important notes to be written. Yeah. Number one. What is number one? In the absence of specific mention, what is it? CDT rate is assumed to be net. However, if assumed otherwise, answer would change accordingly. Yeah. So what is it? Because it is net, I've taken 8 divided by 100. If not, I would have taken 8 by 92. 8 by 92. I've done a separate video on grossing up. You can search it in my channel. You can watch it to understand the concept of grossing up, how to do it, what is net, what is gross, why exactly do we do grossing up. A lot of us don't even know why exactly do we do grossing up of dividend. So you can watch it in that particular video. If you want, I'll put that link in the description. Fine. Let me just take you ahead. The second important point is convertible preference shares, anti-dilutive in nature and will not be considered in computation of dilutive EPS. You get that? So these are the two important pointers. That's it. Now we would have to do our basic EPS and diluted EPS. So come on, let us do this disclosure part, particulars. Yeah, basic EPS, diluted EPS, both have to be computed. Yeah, then we'll write from what to say continuing operations. And then we'll have to write from discontinuing operations. Continuing operations they've given, discontinuing operations the data is not given. How much is the basic EPS? Basic EPS is 5.3 to 5.625 closed. That's it. How much is dilutive EPS? Dilutive EPS is only after considering our options and convertible preferences. We would not be considering this one. So 2.93. That's it. If you ask me what exactly are we supposed to disclose as a part of our statement of profit or loss, I will tell you this box that I just prepared now. So this will be there as an extension to our statement of profit or loss, where you would write basic EPS is 5.625 and diluted EPS is 2.938557435. You can write up to 3 digits or 4 digits max and then round it off. Perfect. Huh? Chalega. That's it. So by this, we're done with solution to question number 1B also. I'll just quickly summarize and then run you through this question number 1B. Pretty simple. They've asked you to compute the dilutive EPS and then EPS. So there are potential shares. 3 types of potential shares are there here. 1 options, 2 debentures, 3 preference shares. Go with the same order. Options first, debentures next, and then preference shares. Don't ever take preference shares before debentures. Very good. So options, the fair value is 90, but the exercise price is 75. So 15 rupees discount element is there. 15 rupees per option. So for 900 options, it comes to 13,500. 13,500 is the free element or the discount element. This, if you divide by 90 rupees, you technically arrive at 150 options being converted into shares free of cost. You get that? So much of shares are increasing without increase in the profit element. So that will lead to decrease in our EPS from 5.625 to 5.572. How did I get this? 90,000 profit will remain the same. 150 options will increase. It will become 16,150. 90,000 by 16,150 will be 5.572. You might be wondering why am I running very fast? Because I've already done the complete explanation. I'm doing a quick summary. Yeah. So 10% convertible preferences. So this, no. Before that, yeah, convertible. Ouch. This is convertible debentures. I typed it wrong. If it was a face-to-face class, all of you would have shouted, Sir. I missed that. Yeah, 10% convertible debentures. 10 lakh rupees is the amount. 100 rupees is the nominal value per debenture. So it is technically 10,000 debentures. So one debenture is converted into 4 equity shares. So 10,000 debentures will get converted to 40,000 equity shares. So the potential number of equity shares increasing is 40,000. And whenever these debentures get converted to equity shares, you need not pay interest on the same. Because you need not pay interest on the same, interest is saved. That will increase your profit. How much is it? Interest at 10% on 10 lakh rupees comes to 1 lakh. If there was interest being expense, it would have reduced our profit, saving some tax. Because these debentures are getting converted to equity shares, there is no interest expense, there is increase in profit, there is increased tax. So such tax shelter also should be deducted from this interest expense. So 25% is the tax rate given in the question. 1 lakh minus 25,000, 75,000 is our savings in interest. If I deduct 75,000 from, if I add 75,000 increase in profit to 90, I get 1 lakh 65. Increased option is 16,150. That is 16,000 original plus 150 options plus 40,000 debentures gives 56,150. My dilutive EPS is 2.93. There is decrease. Next, convertible preference shares. Each preference share to be converted into 2 equity shares. 7,500 preference shares will arrive at 15,000 equity shares. Next, if there were preference shares, you would have to pay preference dividend of 9 rupees per preference share. 9 rupees per preference share multiplied by 7,500 preference shares gives us 67,500. If these preference shares were there and we were giving dividend, you would have to pay dividend distribution tax at 8%. And I'm taking 8% of 67,500, that is 5,400. So I would have to shell out 72,900. So now, because there is no preference shares and they're getting converted to equity shares, if in case that happens, I would increase my profit by 72,900. So 1,65,000 is the earlier profit. You add 72,900, it comes to 2,37,900. Further, number of options outstanding or number of shares will be plus 15,000. That is 71,150. If I do this, I would get my dilutive EPS as 3.34, which is increase in the earlier EPS. So this is anti-dilutive in nature. So these preference shares will be ignored. So our basic EPS is 5.625 and dilutive EPS is 2.9385. So this, my friends, is the answer to question number 1. See you all in part 2 to this discussion of CA final November 2020 financial reporting, wherein we'll discuss question number 2. I think we have 2-3 sub questions, whatever it is. So how many we have? We have 2A, 2B, 2A. Within that 2A there are sub questions. Then we have 2B. Yeah, that's it. So 2A, 2B. That is what we'll be seeing in the next part of this video. So till then, stay in the game. Chalo, bye bye. Go. I'll come back with second question. No, till then, why are you just waiting? Why are you waiting for me to end the video? It's okay. I'll end it.